The tax cut is a positive, and it's a long-term positive for economic growth. The issue of corporate tax rates, corporations are just pieces of paper. It's the consumer, the employee, the shareholder that pays those taxes. And so, in effect, by cutting taxes on corporations, we've actually cut taxes on all people in the economy. And as a result, it will be a tailwind for economic growth. However, it comes 8 years into an economic recovery, 8 years into a bull market. And as a result, it won't be the kind of tax cut that we saw in the early 1980s or in the mid 1990s that leads to 4, 5, 8, 10 years of economic growth. But it will boost economic activity in the years ahead and corporate profit. So it's a positive, but eventually it will get spent away, and that's what we see today. Right now, the Federal Reserve is so far behind the curve. 1.5% federal funds rate is still extremely low. And even if they were to raise rates 4 times in 2018, which is kind of the outside of the envelope, and 4 times in 2019, that still puts them at just 3.5%. And at 3.5%, they do not threaten the economy. So I look at the Federal Reserve today as so far behind the curve and moving so slowly that they are not a threat to either fixed income investors in a sense or equity investors. Now, fixed income investors do have to worry because as the Federal Reserve raises short-term interest rates, the whole yield curve will rise. And I do suggest to anybody that's looking for income that they get to a place where they can have adjustable rates or at least some kind of product that benefits from rising interest rates or inflation. Today, on forward earnings, it's about 17.5. So the market is much more fully priced today for future earnings than it was in the early 1980s. We have had a lot of the bull market run. Now, earnings are going to grow 15 to 16% this year, probably another 10 to 15% in 2019. So I think we can continue the bull market. However, what's fascinating is that what we've seen over the last 8 years has taken a lot of the potential future gains out of this market. And I think it's fascinating too that there are many areas of value in the market. One of the, I mean, almost sounds like a broken record, but one of the areas where there's huge value is in financials. I also believe that normally cyclical stocks boom early, but because of the financial crisis in 2008, 2009, people wanted safe stocks. So they looked at consumer staples, utilities, telecom, and those are really expensive today.